Here we go. MarketFlowTrader.com. 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 We're live on YouTube for a little Saturday Q&A with the fam. Let's go. Good morning, good morning, good morning. Anybody here? Anybody alive? Saturday morning. I know the market's closed, but we're still doing it live on YouTube. All right. So, doing a little recap of the week here for the Market Flow Trader community, a little Q&A. Talk about kind of what went down this week. I think yesterday is a really good example of patience really paying off. Take a look at their charts and dive into this right here. On Friday, we had the ES. It was funny, everyone was talking about how the ES going into lunchtime was like, oh, you know, going into lunchtime, we're not going to get much of a move. But kind of funny because coming out of lunchtime here at 1 o'clock, we basically went to the moon in terms of this move right here. As you can see, this is like that Patrick Wieland beautiful kind of breakout setup here. We had a couple things going on. We had the MACD crossing right there. The MACD crossed there on this breakout, so you're pretty much looking to jump in there and ride this momentum higher. So the idea is, let's think about it like this. What would be my kind of entry? What would be my stop loss? What would be my target? And we got a couple things to base that on. So if we're getting long here at the 91s, kind of after this breakout here over the 91s, let's say you get long, you know, best case scenario, let's say you get long 93s. You're basically risking off the bottom of these candles here. Got these candles right here. So let's say, for example, we're basically ding, 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 ding. We're getting that reversal. We jump in long here, kind of in the 92, 93s in this level. And then we're basically looking to hold this area that we kind of reversed off of, being a short. And then where's our target gonna be? If we zoom out here and we think about target wise, well, we already knew the high of day so far was 904, 903s. So seeing that 903 area was right there, we would think, okay, that would be a pretty good target from this breakout here from the 92s up there to 903. But obviously we want more opportunity there. If we look here at the SPY pivot points, which would have been setting us up right there, kind of funny because we actually pulled back perfectly to that pivot, right? 13, this breakout, yeah, 13, 15. So we pulled back perfectly to that pivot on the 5-minute chart here on the SPY. So you can see that right there, that area, that pivot point holding on the SPY. So this really was a textbook amazing type of setup to get long once we're holding that pivot point there. And you know, for sure our target's going to be back to this pivot above that. And then if we break above that pivot, then you're thinking get a move up to that, like kind of yesterday's pivot being 389 level. And if we kind of look here at the chart, bigger time frame, trying to see, it's funny, we actually hit the weekly pivot right there. R2 389 hit that weekly pivot there. So I haven't really been thinking much about the weekly pivots, but it looks like the weekly pivots can still really have a good influence on the price here. I mean, it's clear that we stopped right there at 389 for a reason. We didn't just magically get to that 389 level and then just turn down for nothing. So I mean, that weekly pivot would have been a nice little, I guess, target there, honestly, on SPY for the ES move. So, but I mean, I would basically be looking for this to test that high of day, and then we're looking to get a move over the high of day here. And I would think that this move here over high of day should at least be larger than this move right here. So if you draw a line between these 2 points for that breakout, which is, yeah, up to the 20s. So if you're ever kind of wondering like what you should think about in terms of like how high this could go, I think one way to really kind of do that not like perfectly, but to give you an idea, if let's say we're pushing up there to that resistance, so let's say like this wasn't here, you know, if those candlesticks weren't here, like we never pushed up there yet, we would basically think about it as like, okay, our first target's right there to the high of day, and then after that, if we get the breakout from the high of day, we should expect a similar move, similar impulse, maybe a little bit bigger on the second impulse there up to the 928. So let's look at the fibs here as well. What do the fibs tell us on this move? So let's say for the Fibonacci retracement, like let's just get this little move right here. You can see we kind of pulled back to that 786, maybe, yeah, like 786 right there on that little move into this level, and then try to push back through. But I really like the Fibonacci trend extension for this type of setup here. I think so we go from there. I need to go other way. Trend extension. How do I do this? I need to go from here to here. Yeah, there we go. So looking at this extension, you can see, I'm interested to see, not perfectly, but basically what that's doing is if you're getting this move like this flag here, we know that the bottom of this move is right there at the 86s, and then this here, the high, the 904s. So we're thinking if we bounce off this level here, we break out, our first target's obviously like a high of day, and that next target's that 915 area from there. So that would be the next target up there to 915. If you guys have any questions or anything you want to ask, let's go. Sorry, the chat wasn't showing up for some reason. But yeah, so this is basically the Fibonacci extension level to get an idea of how high we could go there. So yeah, beautiful textbook setup here. Everything lining up beautifully. We're above the VWAP. We've got the MACD. We've got the momentum, the overall trend. I mean, the market's obviously trending higher. We're staying above that 51 EMA there. And I think this, you know, we had this breakout here earlier in the day that we got in really nice for when we traded this move and got to push up there to the high of day. But this, I mean, this really beautiful setup there. One thing that I have noticed, if you aren't using the 15-minute chart, I like to have that 15-minute chart pulled up, because the 15-minute chart really gives us a beautiful picture here of that breakout. And look at this move up. I mean, we got the breakout there, basically getting that little doji candle, showing that reversal, you know, 3 red candles in a row, the pullback, touching that 80 EMA on the 15-minute chart. And then look at these 15-minute candles. I mean, not one of these 15-minute candles, so from the 88s all the way, you know, up here to the 928s, not one of these 15-minute candles broke the low of the previous 15-minute candle. Not one. So something to think about if you're in a trade. I'm kind of keeping an eye on those 15-minute candles. What are the 15-minute candles doing? You know, that was what I'm looking at here on the 15-minute chart. Somebody just asked, kind of going through it. Leo said yesterday he had the choppy and ended up fighting himself. I think, honestly, you got to think about it like this, Leo. The best way to really think about trading the market is the market's going to make moves, right? So you're going to get like a move like this, you know, where we're going to move up from these lows, and then we're going to consolidate and chop. These areas of chop are just areas that we don't want to be trading. And well, how do we know that we're in a chop? I mean, you can see once these candlesticks start looking like this, once they start, you know, doji, a little messed up candle, you get a little breakout here. But in general, you're just thinking that there's going to be consolidation, right? The market's going to push up, the market's going to consolidate, and then we're going to break out again and make that next leg higher. The thing is, there's not, you know, the market's not always going to be a good trade. We talked about this before. Some days you're going to have those big moves, and then some days you're going to have consolidation. If you look here at the daily chart on the ES right now, and we've basically just been going sideways, here since December 16th. I mean, even we went to sideways since November. I mean, pretty much we've been in this level here since November, going sideways there. So, I mean, this is just an example of how the market is in chop on the daily as well, just going sideways here. We finally got kind of a little breakout, looking a little breakouty here on Friday. Gets above that 15. If it gets above 15, I think we can get that move back up here into the 4,000s next. MACD also crossing there on the daily chart, so that could be a signal for Monday next week, getting that push up here. Thank you, Mary. We're live, doing a little live stream here for you guys to go over some of the setups. Somebody asked, what's the first thing that I look at when I look at the chart? I would honestly say that the first thing I'm looking at is where the VWAP is. So I have the 15-minute chart pulled up here, and I'm basically, if let's say I just woke up and the market's open and I'm like, okay, I want to see if there's a trade. I would come in here and be like, okay, where are we at? We're above the VWAP. Okay, we're bullish. Now I'm looking for a long opportunity. You know, then I'm looking at the pivot points. Looking at the pivot points in the sense of like, hey, where are we at with the pivots? Are we holding this pivot right here? So we know we're above the VWAP. We know we're holding this pivot right here. So then I go down here to the 3-minute chart, pull up the 3-minute chart, and I can look and be like, okay, look, we're holding there at that pivot point. We get the breakout, get that move back up to the pivot. I'm looking at the MACD as well. What's the MACD doing? So basically VWAP, pivot points, the 3-minute chart, and then looking at the MACD, and then I guess I'm looking for that breakout, that next little breakout area. The nice thing about this strategy is it works so beautifully for long and short. If I want to get long, what do? I just draw my line 45 degrees. I let this consolidate. It goes lower. Think about this. This is from 11:57 all the way till 1 o'clock or 2 o'clock. Is that 1 o'clock? So an hour of consolidation before breaking out. But how do you avoid, buying in here? How do you avoid not getting chopped up in this move? Well, I think all you need to do is just plop your line right on there. We did the same thing with this move. We traded this move on Friday live on the YouTube. So, you can see all I'm doing is just looking for these little setups here. And the same thing for the short. If I'm looking to get short, let's say we're looking to get this move down. Well, all I'm doing is just drawing my line like that for a short opportunity. Right? Does that make sense? Literally the same exact idea of wanting to get like a long breakout, but I'm just finding out a little bit of a trend on the short side and then getting that move down there. Somebody asked, what was my idea for the trade on Friday at open? Why did I do it? I think I got long at open. So, looking here at the 3-minute chart, basically what we had going on at that point, if you look at the open here, we got back above the VWAP here at open on the 15-minute chart. Or actually, we were above the VWAP there at open. We were above the VWAP. We had some indecision coming in at 9:30. So we open up right here. We're above the VWAP. We get this candle right here. This is kind of that breakout area. We got long at the 64s. That would have been my entry right here above this 64 level, seeing that we have 64 high, 64 high, 64 high. So that was just me jumping in, seeing that there was action coming in there. We had the volume just spike up right when we opened there, and then momentum carried us higher. I mean, was there a million indicators telling me to get long at that point? No, not by any means. But the momentum, when the market opens, momentum is the key. Which way is momentum? Obviously, the funny thing is in hindsight now, the MACD still stayed true. The MACD crossed earlier at 9:12. We did not cross on the MACD there. So it's just showing you that, yes, we got that push through that 64 level up there to 74, 10 handles. But still, the MACD wasn't lining up. So this was probably I talked about this on the stream as well. I probably should have been a lot more looking for a short opportunity when this kind of broke back down, but you know, it is kind of what it is sometimes. When this is not all here, it's not as easy, right? When you're looking at it like this, you're like, oh, it's going to go higher. But that was just literally kind of when the momentum comes in there, people are buying, the market's pushing up. You know, I think that's just kind of overall price action, right? We also had that big move up pre-market as well. From the 20s, we moved up there because the numbers came out and we pushed up to that 74 area. So that's why I was thinking, okay, you know, maybe we break out and just kind of squeeze up here at open. Yassine asking about the I mean, at the end of the day, here's the thing is like if the market's moving, when numbers come out and the market's moving, you can easily, you know, jump in long, switch short, vice versa. You know, when the market's kind of making 20-point moves up and down on these candlesticks, you know, when numbers come out, it's different type of trading. You're just trading the overall kind of flow. You're trading the price action. I wouldn't say the indicators are as important. I mean, obviously they're important, but in general, you know, if there's a lot of action and the market's moving up and down quickly, you can definitely trade it different. You're trading it a little bit differently, if that makes sense. You know, when the market's got a lot of volume and a lot of action and we're moving 20 points a minute, yeah, you can definitely trade it a little differently than when the market's moving, you know, 1 or 2 points a minute. How do you still not losing much? How do you get an excellent risk reward when the markets are so volatile? I mean, you're trading, my friend. You're trading the action. I mean, like here, like let's break out right here. When we broke out over 66, you know, my stop is down here at 61, the low of this candle. So, you know, you're risking 5 here, risking 5 for a possible 10 to 20 handle move up. And we got that push from the 66s all the way up there to 86. I took a little bit of profit pushing up into the 80s there. This was a live trade on Friday. So, you know, that's very important to kind of understand that when the market's hot and you're getting good breakouts, good setups, it's kind of, you can jump in and just ride that momentum. Merrick Mueller, where do you find the news? So there's a couple of different websites. I use just investing.com. Investing.com has their little economic calendar on there telling you when the news is coming out, when data comes out. So it's pretty basic. You just go, I think there's like 3 or 4 different websites that have this. I just go to investing.com, economic calendar, and it'll show you kind of the data coming out that day. So like next week, if we look at the data here, let's go to the filters just to look at like what's the most volatile news of the week. So next week we have on Monday a lot of New Year's days in Asia. It's the Asian New Year's. And then on Tuesday, not much going on. On Wednesday, we have the ISM manufacturing. Wait, this is this week. Next week, sorry. I was like, New Year's on this day? Here we go. All right, so on Tuesday, we're going to have Fed Powell speaking on Tuesday at 8 a.m. And then Thursday, we have the core CPI numbers, which are always big numbers. And then the initial jobless claims. So this week, the big news is going to be Tuesday and then on Thursdays. So looks like in Japan, they have a holiday called Respect for the Aged Day. So I guess it's like for old people, respect. Got to respect them, the elders. How heavy do I consider the EMAs for the 3-minute chart? Yeah, I mean, I'm definitely considering them. I mean, they're important in the sense, you know, when we're getting those crosses on the EMA, that's when we're getting the MACD cross. You know, we saw how the 8 EMA here held up support On this move, pretty much all the way up, I mean, to the 900s. We got that support there on the 8 EMA, so I would definitely say the EMAs are important. You know, if we start getting below the EMAs, well, that's probably a good indicator we're gonna pull back here. Like here, when we start getting those closes below the EMA, we went from the 98s down there to 88s. So if I'm looking to get long, if I want to get long here for this breakout, I definitely want to wait to get a close back above that EMA. And you can see the first time that we closed back above the EMA was this candle right here for the reversals. So kind of a good way to look at it. We got that first close back above the 8 EMA. This one was like right there, kind of close to it, but in general, that first like green candle kind of closing above and getting that big move up there to the 904s. So just keep an eye on those EMAs for that in that sense. You know, what are we doing? Are we crossing back above the slower EMA on the 8 EMA? That means we're ramping up. And once those EMAs start looking like this, once we're getting these nice fanned out EMAs, I mean, that's beautiful price action, right? This is all like beautiful price action when the market's fanning out those EMAs, because it's just showing that the market's just trending up and pushing from the 900s, 93s, all the way up there to the 28s. Would I be willing to look from the 3 a.m. to the 5 a.m.? Yeah, we can look. I mean, the market's always moving. Obviously, overnight, there's going to be setups here. I think there's a setup right here going into 3 a.m. on this move right here. Same idea like we talked about earlier, you know, getting that break to the downside here. I mean, that's a pretty textbook play. We got the MACD crossing as well. MACD crosses. We get this move down from the 42s down to the 30s. So yeah, there's always, you know, there's always setups. Same thing here. Let's say you're getting another short right there on this breakdown. The question is, why don't you get long right here maybe on this kind of break back up here? But I mean, not every move is going to be perfect. It's not going to be 100%. But I would say, you know, that right there from alone from 2 a.m., 3:45, pretty good setups there. One thing that we really want to focus on too is like the angle of the breakout, right? Is the angle really steep? Like, let's say, like, is it this steep? Like, let's see how that breakout, like that angle is just very steep right there. Like, this is too steep of a breakout line, if that makes sense. Does that make sense? We really want this line to be more of like a 45 degrees for this breakouts. Because when it's too steep like this, it just kind of could be a fake out, could be a retracement just for another short opportunity. So we really want those breakouts to come. See how like this, the angle on this one's nice because we're getting some nice consolidation, and then we're getting that break. Like, it's not just like straight up, it's not just like flat. It's nice like 45 degree angle there. So think about that. How do I know when the trend is continuation on extended price action? I mean, I guess you never really know for sure. But I mean, that's when the MACD comes into play. I mean, like here on this move, we got the reversal in the morning at 10 a.m. from the 48s. And we got the next MACD cross about an hour later for about a 50 handle move higher. So you're kind of, you know, looking to see if the trend changes. If you're long, is there the same reason that you're looking to get long? Is there a reason to sell, right? Are you running into resistance? Are we breaking back down? Is the MACD crossing? Are we running into a pivot point? You know, I want to have an indicator. I want to have a reason. The same way that I'm looking to get long, I want to have a reason that I'm looking to take my position off, to sell my position, right? So think about that. Like when you're looking at a trade, you're trying to figure out where your profit target is. You're not magically just trying to figure out, okay, I just want to sell at this level. You know, you're looking for resistance, you're looking for a trend change and those types of things. So You know, I could even be better about holding my winners longer as well. I mean, we got long here at the 65s. I took profit when we pushed up in the 80s, but you can see, I mean, we just went, I could have pretty much just, you know, at least held it to this point, to the 900 area. And then this breakout here, you're just an overall straight move from the 91s all the way there to 26s. Keone, how often do I trade after hours? Honestly, I don't really trade a ton after hours. Sometimes, like if the market's really moving, I might take a trade after hours. But in general, I feel like I don't really trade that often after hours. I don't really feel the need to, because you can't trade 24 hours a day. Like you'll just end up killing yourself. So I think that's yeah, I mean, you gotta have some time off. You can't just stare at the computer screen all day. It would be too easy to just trade all day every day and just lose tons of money, I think. What exactly is the SPY? I mean, the SPY is an ETF that's made up of stocks that follow the S&P 500. So the SPY is actual equities, you know, actual stocks in the ETF. And I would say the SPY is probably, you know, the largest kind of traded ETF with options, with the big funds and stuff like that. If they're trading the S&P 500, they're trading options. They're probably trading options on the SPY. And then you have the QQQ for the NASDAQ as well. Yeah, Yassine, I mean, at the end of the day, you know, I would say that obviously I have been trading now for 6 years, so I definitely kind of have like an instinct for the price action, kind of looking at the price action. But I will say that I would probably be better off to sometimes, you know, really just be more patient and wait for those really kind of good setups, because sometimes, you know, your intuition doesn't always play out perfectly. Maybe you might get a bigger stop than you want. You might chase the price action a little bit. But I think at the end of the day, I'd be better off probably just waiting for, you know, the best setups. You know, like this breakout here on Friday would have just been like, oh, you know, let's get long here and just ride this momentum. Get 10 contracts. When we get that breakout, got the MACD crossing, got the pivot points, got everything lining up there beautifully. We're above the VWAP. It's all golden at that point. So this is the difference between showing like having a really good trade and then having like an okay trade. Like I want to get to a point where I'm only taking like really good trades, so I know that I can like scale up, because I know the risk reward is much better, and I know that the odds of that setup is going to be much higher in the chance of it actually playing out than me, you know, just magically being like, I'm going to get long. Oh, I'm going to get short. So yeah, that's kind of what I'm looking at. And then other than that, what do we got? Any more questions? I'm here for you guys. How do you switch from being impatient and then having control, impatient? You know, I think at the end of the day, it's just about experience, right? Like the more and more that you trade, the longer you trade, the more that you figure out like, hey, you know, I can sit here all day long and I can hit buy, I can hit sell, I can get chopped up, or I can just be patient, wait for my setups, and then have, you know, have a much better experience trading, you know, just being patient. That's the hardest part. Like for this move here, you know, let's say you got that breakout over the 93s, up there the 904s, okay, and then it pulls back, fine. But at this point, it's like, what am I going to do? Am I going to buy long here? No. Am I going to buy long here? No. But that's an hour. I mean, this is an hour of price action here from the 902s back down to the 88s. So, I mean, it's just going to take experience and just discipline to not want to just jump in here. Be like, oh, I'm just going to jump in. I was going to jump in, you know. You're really just kind of waiting for that nice breakout, that confirmation. The MACD's not crossing, once that MACD crosses, okay, you know, then we can think about getting long there. But it definitely is a battle, 100%. It's a battle trying to hold, you know, trying to not take a trade for an hour. You got an hour of just sitting there staring at that, the market moving sideways basically, and you're like, okay. Is Trade-of-8 better than Optimus Futures? I mean, at the end of the day, I think all the platforms are pretty good these days. It comes down to just kind of whoever or whatever you want to go with. I traded on Optimus back in the day. The guys over there at Optimus Futures are actually pretty cool guys. They'll pick up the phone if you call them. So really comes down to your personal choice, I guess. If you like the customer service, you like the platform, then I guess you kind of go with them. Do I use the Fibonacci levels? I do. I kind of do. I kind of don't. Sometimes I feel like I use them more than I use them on other days. It just depends on the price action. But I mean, there wasn't like a ton of pullbacks on Friday to really show that well. But if we look, let's just look and see where this lines up actually. So we got that big move pre-market here on the fibs. Oh my gosh. For that retracement, I want to see where this lines up at. So yeah, I mean, it's kind of funny. Look at that. Right? So we had the big move pre-market when those numbers came out. The market moves up to the 74 level here, maybe a little higher. And guess what? This pullback here that we had it open perfectly hit that 786 level. Maybe a little bit lower there, but in general, just off that first candle. If we go to that high of that first candle right there, pretty much 786, like this is the golden area for getting long there. So that's a good example. I mean, the fibs, basically what you want to do is you're using the Fibonacci retracement tool over here. You know, we're clicking down there at the bottom of this move, being the 20s. That's where that candle opened at. We're going to the top of that move right there, 74 level. And really, when it comes to Fibonacci's, this is like the golden pocket. Like this is where Fibonacci traders want to be buying at. They want to be buying that 618 to 786 level. That 786 level is like the golden, you know, if you can get the bounce off that 786 level, well, look at that risk to reward there at that point. So let's say you're long from the 35s. I mean, that rewards all the way back up there to the high, that 75 level. So pretty good risk reward there on that 786 bounce. And then if we're looking for, we talked about like the extension, Fibonacci extensions here. If we want to kind of think about this breakout move, I always do this wrong. You gotta draw it differently. Need to be okay. Fibonacci retracements, extensions. Here we go. So like, let's say we want to see how high this move could go when getting that breakout there. Kind of interested to see where this lines up at by the end of the day. I mean, it's pretty much showing us once we break out over the high, over the 74s, the idea of kind of pushing up here, that 786 level, once again, that 96s. After that, the 905s, and then pushing all the way up here. 33s being the high of that extension there. So I'm trying to think. Yeah, I mean, that would pretty much be spot on in terms of where it needed to be. The bottom of those candles. So you're basically on this move for the extensions. What you're looking at here is that bottom of that move to the top of that move, kind of looking for that bull flag breakout there. So you're just going Fibonacci extensions over here. I'm going to click on that bottom of that move. I'm going to the top of this move here. And then I'm basically creating a bull flag here to see how high this could go from where we're at. So Fibonacci extensions, Fibonacci retracements. Yassine says that he doesn't know what to do, that he can't control himself. I mean, my friend That's part of trading. That's the problem, right? Like the thing about trading is no one's going to stop you from placing a trade. Your broker is not going to call you and tell you like, hey, you shouldn't get long there. Hey, you shouldn't trade this. So it really comes down to you just got to have insane discipline with yourself. That's one of the reasons, like I say, I go to the gym, you know, I do all this stuff outside of trading because I want to build up my discipline across the board, you know, not just from trading, but I want to be disciplined in every aspect of life because that'll force me to have to be a better trader as well. Because if I'm disciplined everywhere, you got to ask yourself, you know, what are you willing to give up so that you can gain? And with trading, what are you giving up? If you're giving up, let's say what are you giving up when you want to be more successful trading? You're giving up what? You're giving up the rush, the excitement of trading, right? Because when you're trading and you're all over the place, you're just buying, selling, you're getting a rush. You're getting basically a chemical, you know, dopamine rush. You're getting excited. It's fun. It's like, oh, I'm getting these trades. Oh, I'm in a profit. Oh, this is happening. So you're getting that excitement from over trading, basically. I would say that most people, the reason they over trade is because of the excitement, right? Like they have a plan, they have it all, but there's definitely like a rush that comes with being in a trade, you know? So you gotta lose that. You gotta lose that emotional desire to like be in a trade. It's not fun to trade. Remember that. Like it's the same. The thing should be, if you're entering a trade and you're excited about it, or you're like, I mean, you can be excited, I guess, but at the end of the day, like trading isn't supposed to be fun. Like trading's not supposed to be like playing a video game. Like it's supposed to be like, hey, we sit, we wait. We get the opportunity, we jump in, we take our profit, we wait again, we look for the next opportunity. Just got to remove that emotion of wanting to get that rush, for sure. Definitely some rush there. Is there much of a difference between the Fibonacci retracements and the pivot points? There are... It's a little bit of a difference, yeah, because it's the overall, you know, that the Fibonacci extensions is really kind of looking more so at, you know, like you're drawing just like that move alone, where the pivot points are a calculation of where the market moved the day before. So it's kind of interesting because the pivot points right there on Friday also lined up kind of perfectly with that 786 level as well. So, you know, the more that you can have things lining up, the more indicators line up. Indicators, you know, being the pivot points, being the Fibonacci's, being the EMAs, when all these indicators line up perfectly at a support level, well, that's just going to be that much stronger of a support, right? So, Keone talking about getting life together. Hey, I mean, trading, it's life, you know. You want to make money trading, you gotta have it kind of, I don't know, you gotta kind of figure out everything in life. Trading is life. Life is trading. Trading life. So yeah, let's just think about, let's look at we'll look at the daily here to kind of wrap this up. We'll look at the daily and think about the levels for next week. Kind of going into next week, what we have going on here. So we saw on Friday that we pushed up to that high at that 915 level here on the ES. So I would say, you know, we know that there's resistance right there. So interested to see what happens Monday morning if we get above that resistance there. Oh gosh. And then after that, there's really not, I mean, if we get a big move on Monday, I would say that there's a good possibility of kind of moving up here to the 4,040 area. So, you know, after getting above the 920s on Monday, if we get up there, well, that next resistance really kind of is like up here in the 40s. Maybe not that high, but in general, definitely would say there's a room to run here. And then on Monday, we know this 3,800 level has obviously been massive support down there. So pretty much just in this channel both ways. I mean, there's a channel to the upside. We're kind of tapping the bottom of that channel right now from November. This is November action, December, and then going into January here. Pretty much just going sideways. I mean, the market's just been consolidating here at that level. So interested to see. We got some big numbers coming out this week. Will those big numbers move the market here? And kind of interesting to look at the daily chart and just be like, wow. Think about that. Like, we've made money basically in between this channel now for the last 2 weeks of trading, just basically inside of this channel here. Funny to think about. It's so funny to think about there. But what else we got? I mean, I don't think there's really not much in terms of actual levels there to think about. Really just on Monday, if we get above that 920 level, I would think we push up there above the 4,000s. Monday, Tuesday next week, kind of ding, 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 push up there 4,000 level. We'll see how that, there's not much resistance really kind of on the daily there. If we look at the hourly chart, I mean, even on the hourly chart here, I mean, you've got 4,000 kind of being resistance there. And yeah, there's a little bit like 30 to 20 level resistance there. But if we get that push up, 4,000, very doable. And then after that, up to the 4,040. So keep that in mind for Monday. You can see a pretty aggressive move up there on the hourly chart, getting denied kind of at that resistance there. But we did break out kind of over that 900 level, which was holding us down. We did, ooh, actually look at this. So we got stuck there before kind of in this level. So, and we sold off on that move back down. So let's see, we'll see what happens here. That's a pretty big move back up here, like in terms of the velocity kind of pushing back up with those numbers came out there on Friday. So just kind of see what happens here on Monday. I really don't love to sit here and like think about, oh, what's going to happen on Monday. It's kind of like, hey, when Monday comes, we'll know what's happening. That's the great thing about trading futures. Like, we don't have to predict the future. We just got to sit back and wait for something good to happen. We can see after hours there on Friday, kind of pulling back from the 920 area, pulling back to the 900s there. And we'll see how this happens on Monday. Kevin Pham, how do you stop shorting at resistance before confirmation? Honestly, for me, I don't really short. I don't really buy. I don't really like buy long or short at resistance or support. What I'm looking for is the breakouts, right? Like, we're looking for a breakout. Because the reason that the breakout is going to be so much more powerful than just trying to buy a support bounce is because, you know, once we get that, we bounced here off this 80 area, 85, we bouncing off there. Once we bounce off there, then we're like, hey, there's a good chance of a reversal, but do I just want to get long right here at 88? Probably not. I want to wait to see that this trend changes. Once that trend changes, well, then I can get excited to get this move back up. So for me, I really am looking for breakout breakdowns. I'm not looking to, you know, just trade. I'm not looking to trade support resistance in terms of like shorting, you know, at resistance or shorting at you know, or buying at support. I'm looking for breakdown breakups. Here's like an example, you know, on this short right here. Am I shorting up here at the 35s? No. I'm shorting once we break kind of below the levels of these candles. So kind of shorting here at the 32s, and there's that move down to the 24s. So I said so a lot. So. I am called Al. Asked a question about indicators. Is it better to start buying into indicators? You know, I think at the end of the day, you really, when you first start out, you don't need to overcomplicate things. The problem is, like, if you get the book map and you don't really know how to read it, it could actually play against you. You know, like, it creates like this false idea of where support resistance is. So You know, if you're a new trader, I would say that your best bet is just to really focus on, you know, a few indicators, focus on the price action. Don't worry so much about having every single indicator out there. Like, I think you're just much better off just kind of starting slow and then adding stuff on as you go. Like, you don't need to just go first day and get every single indicator there is, but probably just a good idea just to, you know, you don't want to overcomplicate things. You don't want to have too many indicators and then not have a clear idea of what's going on. Like, let's keep it simple. When you first start, keep it simple, and then you can always add more stuff on later on. So, what's my crystal ball saying for the rest of the year now? Oh, honestly thinking that the market's going to rally this year just because everybody else thinks the market's going to crash. It's normally a good indicator. If everyone else thinks the market's going to crash, well, it's probably going to go up. So that's what I'm thinking. I think it's a good plan. Market goes up. I'm not sure how high it goes, but I think there's a chance the market goes up here. But I could be wrong. So Chris B, are we still doing a subscription service to Market Flow? Yes, don't worry. If you're already in the Market Flow community, you get 6 months free. So you don't have to worry about that. We haven't decided the price just yet. It really comes down to like how much work I want to do, and then that's kind of what the price is going to be. But I would say the monthly fee is going to be like $60 to $80. I can't really do a lesson on the book map right now because there's not really any data coming through. I'll do a video this week talking more about the book map while the market's open, because it's not really fun to look at the book map when there's not anything going on. So we'll have to wait till the market opens. But we'll do maybe we'll do like a members only Q&A for just the book map at some point this week, if that makes sense. So we'll try that. All right, there it is, Saturday morning. I think pretty much answers most of the questions. We kind of did a little recap, giving you guys, I just want you guys to understand these little, very simple idea, getting these breakouts. You know, again, if we're looking to get this breakout here on this move, we're consolidating, we got the MACD crossing. You know, I'm looking to get long. Once we break out, we get the MACD, so we're getting long here at the 92s. You know, our stops right down here below these candles. It's not rocket science. Like, don't overcomplicate things. Again, you know, we got that breakout of the trend. Okay, we got the breakout. Perfect. What are we looking for? You know, we're looking to get in once this thing breaks to the upside. So we're getting in here. Our stops right here. You know, our target's going to be the high where these candles are. And that's exactly the trade. So we're jumping in 91s. We're taking profit up there at the 904s. I mean, could you hold this longer? Sure. Look how high this thing went. It went higher and higher. You could also just take profit there and do the same exact setup again. You know, the MACD is still bullish. We draw that line there, 45 degrees. We're jumping in here at the 901s. We're riding this all the way up to the 16s. So there it is. I'll see you guys on Kevin said, how do you have confidence to hold it past the day of the high of day? I mean, it really comes down to the price action. You know, is the market showing strength? Are we squeezing? Is it going? It's hard. Every setup's going to be a little different, right? Every setup's going to be, sometimes you're going to get these breakouts and you're like, oh, wow, there's just like a ton of action here. Like this move here, when we break above that high, you can see it's just green, a little bit of red there, but these candles really start moving quicker and quicker and get up there in the velocity. We're looking for momentum, baby. We're trading momentum. We're trading with the flow of the market. So there it is. The roosters are crowing. I'm going to head to the gym. It's Saturday morning. Hope you guys enjoyed the little stream, and I'll post up the this for you guys to view later on as well. And we'll be live Monday morning, 9:15. We'll do some member-only live streams this week as well during the market open. We'll go through the book map and all that fun stuff. We got more videos coming and all that fun stuff in the Market Flow Trader community. Just stay tuned. It's just the beginning. You guys are early to the party. All right. I'll talk to you guys on the flip side.